third quarter saw healthy levels of gold buying, up 28% on the same period a year earlier, thanks to strong consumer demand and central bank buying. Jewellery demand continued to return to pre-pandemic levels, as much of the world is now largely free of COVID-related restrictions. China is one exception here, and we saw relatively modest growth there, with consumers still quite hesitant amid continued sporadic lockdowns. Central banks recorded a record quarter of buying, and this really chimes with the results of our recent central bank survey, in which a quarter of the participants said they plan to increase their gold holdings in the next 12 months. In the investment sector, bar and coin demand was very strong, more than 350 tonnes, as surging global inflation brought to the fore gold's role as wealth protection. And the price pullback during the quarter helped too, because it gave investors the opportunity to buy at lower levels. But in the ETF space, there was a contrast, and investors there focused instead on the surging value of the US dollar and rising interest rates. And accordingly, we saw significant outflows from gold ETFs of nearly 230 tonnes. And finally, the technology sector had a very challenging quarter, with a sharp contraction in consumer demand for electronics amid the global economic slowdown. For the full assessment of the data, please download Gold Demand Trends from goldhub.com.